Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading satellite office down in sunny South Florida. Today's date is Sunday, November the 18th, 2012, and here is this week's Market Weekend Review. I want to first start by taking a look to see how the indices closed on a percentage basis for the week here. Starting off with the NASDAQ was down 1.76%. The Russell 2000 was down 2.2%. The Dow Jones Index was down 1.77%. S&P 500 was down 1.46%. Taking a look at the commodities, the GLD gold was down 0.94%. Crude oil was down 1.59%. Was up 1.59%, excuse me. Taking a look at oil, the oil index was down 2.36%. That's comprised of all your little energy stocks there. The banks was down 2.2%. Were down 2.2%. The Dow Jones Transportation Index was down 3.31%, and the Volatility Index was down 1.62%. All right, so taking a look at this information here, we can see that the weakest index across the board this week was the Russell 2000. We can see that crude oil had a nice little pop-up, up 1.59% due to the little overseas stuff they have going on over there between Gaza and Israel, I believe it is, and that caused crude oil to make a nice little pop. And one of the sectors that were weak today, that were weak across the board during the whole week, were the transports, which is not good. Transports down 3.31%. Volatility came back in as volatility kind of quieted out the market on Thursday and Friday. That was probably due to some of that volatility, but volatility was up a lot earlier in the week. So anyways, let's go and take a look at some of the charts here. I want to first start off by saying I hope you guys are enjoying your weekend. There's a lot of interesting news, a lot of interesting stuff going on out there. And at the same time, it is holidays. We're going into the holiday season. So I hope you guys are enjoying your weekend so far. Grab your popcorn. Let's get right into this analysis. I'm going to try to make sure I run through this video not too quick, but at a speed where it doesn't make it a movie. All right. So let's go ahead and start off by taking a look at the SPY monthly chart here. You can see the SPY monthly chart. All right, we are trading below the lows that we made back here in September and October, and currently the SPY is at 136.37, hanging right around the lows that we had back here in August. The lows that we made back here in July around 132.60. The low that we hit for this month already is 134.70. All right, so we still have some more time before this candlestick closes. So let's go ahead and move over into our weekly chart. You can see here the weekly chart. It's not looking good for the fact that we're back below this key level right here, this 137 level. The longer we hold below 137, the more inclined I'll have to be that we're going to be trading back towards this 132.50 area, where it looks some decent support around that area, 132.50. You can see we're hanging around here, right around the 50-day and 50-day simple moving average and 50-day exponential moving average on the weekly chart. All right, and this week we hit a low of 134.70. Next support doesn't look to be till around 132.50, but you can clearly see how this 137 level was the key level from last year, was the key level from this year when we trapped some longs above that key level. We broke right back above it back here in, say, right here going into the beginning of August here, late July, and right now we're back below it. So if we do not hold above this 137 level, and we take out this last week's lows, look for us to trade lower towards 132.50, as it does not look decent out there. And Friday, yeah, we got a nice little bounce on Friday. Okay, and as you can see here, Friday we feel this little gap, kind of in this little gap area that we have right here from back here in July 25th. And I have these key levels marked on the daily chart of the SPY. Let me just fix this chart up here for you guys real quick. And you can see here how we got a nice little reversal candlestick, took out the lows from Thursday, pretty nasty. Then we reversed right back up pretty fiercely. So that's it's pretty interesting. We're going to have a lot of charts that have hammers on them. So earlier in the week, early next week, all right, going into next week's trading, Monday and Tuesday, we're going to have to wait for some clues, because a lot of stocks have these little hammer reversals, and some of them are BS and some of them are the real deal Holyfield. So we have to wait to see which ones stick. All right, so keep that in mind. Let's go ahead and take a look at the Qs, triple Qs. Let's start off with the monthly chart as well. Triple Q's monthly chart, of course, we all know like we've been explaining here, they got rejected against that 50% retracement from the tech bubble sell-off, and you can see we're in this little rising upward channel. Now, if this rising upward channel breaks, guys, and we start holding below this, which we're kind of getting close to the do or die situation right here, it's if we do break, it's going to be game over, as we're going to be putting the 2009 low or trend, I should say, in jeopardy right here. So that level to watch on the Qs is going to be 60. We hit a low today of 60. We hit a low this past week of 61.31. If we break below 60 on the Qs and we start holding below 60, it could get very ugly. So we have to continue to watch for clues. Let's take a look at the weekly chart. And if at the weekly chart, we have a little bit, we have some signals here showing that we could be at a possible bounce. All right, some hope could be here in this chart as we have this little downward trend line that broke, that caused a nice little rally from the end of the July or beginning of August all the way to a high that we made back here in September. And this is kind of, we're at the kind of back test area right now. We still have some decent support around 60, and you can see why that was a key level. So you can see how the SPY is trading below that key pivot level that they made last year. You can see the Qs are still hanging above that key pivotal level that we broke out of, back test held, and then we rallied back up, made new highs for the year, and then we're right back down. So it's been a pretty volatile year. At the same time, this is a little key head and shoulders pattern that a lot of people are watching for to see if it's going to play out on the Qs. Obviously, that if that happens, that's probably not going to take place until maybe the second quarter of next year if they bounce it back up and everything comes to fruition. But at the same time, 60 is a key level to watch on the triple Qs. Let's go ahead and take a look at the daily chart here of the triple Qs, and you can see here the daily chart. We feel this nice little gap that we had back here from June the 5th. We feel that gap around towards that 6112 area, and this could be a relevant area to try to pick some longs. And at the same time, we want to make sure if we're talking about the Qs, we're looking at Apple. Apple's the most heavily weighted stock in that index there. And you can see Apple made a nice reversal. It had a humongous volume. I haven't seen that volume spike like that in Apple since back here in early March. So therefore, we got to watch Apple to see what it does this week, if it holds up, and if this was in fact a short-term low. It is coming all the way from 701, and it hit a low of 506. So just about down close to 200 points. And now, this could still not be the area to get a bounce at. It could still start fading off that little bounce. That could have just been a little test of some people covering some shorts there, big institutions or whatever the case may be. As it did come into the support level, at the same time, we have to continue to watch Apple and see if it's going to hold up. If it holds up and the sectors start holding up, key sectors, which we'll discuss here shortly, start holding up, then we can get a nice, meaningful bounce. All right, so let's take a look at the IWM. I see what the small caps did. IWM, nice bounce, gap fill area from all the way back down here. This little gap, again, that we made here in August. On August the 3rd, that little gap up. We filled that gap up, got a nice little reversal here. And we now must continue to watch the IWM to see if it's going to try to get a bounce back up and probably get back inside this little key channel that we were tracking inside before it broke down. Now that level is going to come around the 79 area, but the IWM could get back over 78 and hold a bit there. We could maybe get a bounce going into next week. Let's take a look at the weekly chart. You can see the weekly chart did a little fake breakout over this 83 level, which we had been watching, and now it's below 83. Have a little fake little breakout. So it's a bull trap that people have been getting screwed out of, or I should say, they got suckered into this little breakout, and they, hopefully they're not still in it, but they are. They're still caught on this little breakout over 83. Any case, let's take a look at the monthly chart. The monthly chart over here, this monthly chart, again, on this level to watch on this chart is 85. The monthly chart has been showing weakness every time at 85, which trickled down to the weekly chart, showing weakness at this 83 trap, and now we have our daily chart trying to get a bounce. All right, so that's how the IWM is looking. Let's take a look now, just a little quick look at the YM. You guys know I do not trade the Dow Jones, but I do track it just a little bit. You can see the Dow Jones is at some slight support around this, around this, what level is this here? Around this key 12,500 level right here. So we could get a bounce right here as well on the Dow Jones to see if that index right there wants to try to hold up there. Okay, now let's take a look at the dollar index first. I want to take a look at the dollar index. The dollar index has been on a tear. If you guys have been watching, if you guys have been in the chat room intraday, if you guys have not been to our website, by the way, it is wallstreettrading.com. If you want to see some of our videos to go back and see how we analyze the market, you can click on the upper right-hand side, the My Wall Street TV tab, and you can see all our archived videos there. And if you want access to the chat room, on the home page of wallstreettrading.com, you can fill out the form on the right-hand side and get the credentials to access the chat room intraday, which we open up at 8:15 in the morning. Good stuff. Want to make sure you be there if you want to be on the right side of the market. Let's go ahead and take a look now, at this dollar futures chart. Sorry, guys, I'm all over the place. I'm trying to knock this video out for you guys and get back to enjoying the weekend here. So, dollar futures chart got a nice little bounce. You can see here we got rejected off this key trend line area around the 81.52 level here. Could be a short-term reversal. All right, if you guys recall on my little hourly chart of the dollar futures, you guys see I talked about this little declining, this little rising wedge pattern that we had right here. Also had some good analysis forming inside the channels. But what happened, we had a little rising wedge form. We broke down, all right, and then they bought it right back up. Then Thursday, we broke down again. Then they bought it right back up. So you can see what they're doing here. If now we sold off on Friday, if we hold below this 81.25 level here on the dollar futures chart, and the dollar futures chart breaks below this key shaded area I have, we'll be looking at picking up some commodities. All right, we did try to pick up some commodities early last week, but then crude oil was just chopping around. Crude oil actually is still looking pretty good, which we'll take a look at the chart here shortly. But point being here on the dollar chart is that we could be at an area where the dollar's going to start selling off now, and we have to start looking at these commodities of the market for a bounce. You can see here they just squeezed a little bit of people out that were probably still trying to short this dollar here. Squeezed them out, brought them to the maximum pain, and you can see now we got a reversal here. You can see they tip-topped a little trend line right from the back test, which has been back testing that key trend line a bit off that little rising, off that little bear wedge pattern. So we'll see how this develops, but we have some interesting signals right here. You guys got to watch the videos throughout the week to see how we take action. All right, so now that's a dollar chart. Let's take a look at the weekly chart of the dollar. You can see the dollar at this key little resistance level from this little long-term, not this long-term support, but this little support that was holding from all the way from May that broke down here in August. Okay, so therefore about 3 months of action right here. So if we do hold below and get rejected at this 81.50 level, look for the dollar to fall back down. If we do push up a little bit more, you want to be watching this 82 level on the dollar futures chart. And that's what we're looking at there on the dollar. Now let's take a quick look at the euro. See how the euro's lining up here. Remember, the euro's at this key area on our chart from the bottom of this little downward channel that we've been tracking here. All right, and really, if we start holding below 127 on the euro, that would not be good. But so far, you can see the euro's trying to hold the 127 level. And if we start trickling back up and we break back above 1.2925, that would be good. But you can see we're at the bottom of this channel where we have seen the euro get bought up before in this little area. We're going to continue to track it. We'll keep you guys posted with that right there. Let's go ahead and take a look at the crude oil. All right, we'll take a look at the commodities now. Start off by taking a look at crude oil. Crude oil's been holding up pretty well on this little 84.55 level here. All right, if we can break back above 88 and then hold and break above 89, that would be good. But you can see we have this nice little downward channel in play. And this downward channel could be telling us some clues that we're going to, pretty soon start to get some upward pressure. You can see the 8 EMA and the 8 EMA is flattening out here, and the 20 EMA and SMA is trying to flatten out a bit here as well. Still have a declining 50 and a declining 200 moving average. Let's take a look at the weekly chart. Weekly chart's in this nice little triangle. Something setting up here, guys. Again, we have to keep an eye on this crude oil. Take a look at the monthly chart. Monthly chart setting up in this nice little triangle. We're going to be looking for a big move in crude oil, whether it be to the downside or top side, like we've been explaining here. Going into the year 2013 or in the first quarter of 2013, expect a big move in crude oil. So you got to keep on watching that sector there. That's crude oil. Let's take a look at the USO, since some of you home gamers like to trade the USO instead of the actual crude contract. And USO, the key level that USO needs to get above is 32. this ETF has been having trouble breaking above 32. As every time it gets close to 32, it gets rejected intraday. How do I know this? Because I've been tracking it for the past 4, 5, 6, 7 days here now. Whatever, just trying to watch to see when it goes above this 32 as I am trying to look to pick up some USO or some crude oil to hold it for the next little short-term swing trade. Most likely, obviously, the top side. If the stock doesn't go down anymore, it trades sideways. The next thing most likely it's going to do is trade up. Remember, when things stop going down, they either go sideways or they go back higher. Vice versa. If things stop going up, they either go sideways or start rolling right back over. Just to put it in kind of layman's terms there. Let's take a look at the GLD. All right, GLD tried to get a nice little break over 168. Again, got rejected. Not really seeing much interest in action in gold. We're going to take a look at the gold miners here, and you're going to see how the gold miners broke down exactly what we were looking for. And, if you were watching some of our videos, you would have been able to participate and capitalize on that GDX breakdown that we had there in my channel analysis system here. So anyway, GLD. Let's start off by taking a look at the monthly chart. GLD still kind of hanging in there, really just trading sideways on the monthly. All right, as you can see, last month it got a little fake breakout over 170, pulled right back in. So the key level to watch on a little intermediate to long-term time frame is this 170 level. Let's take a look at the weekly chart. You can see the weekly chart still looking pretty healthy. Had a pause day last week, so we want to see if gold gets bought up. If we can get a nice little some nice buying pressure in the GLD that takes out this 168.66 level, and we get a nice close above that level at the end of next week's trading, we can have some nice action here. So you want to keep an eye on that GLD. That's the daily chart. Okay, so let's take a look at the GDX now, because the GDX actually broke down just like we were expecting. Again, if you guys were watching these videos and you guys were watching those stocks, you guys would have been able to capitalize on that via my channel system analysis here. And again, downward channel, downward sloping channel, still relevant. You still take the trades and trade it as if it was a horizontal channel. You can see how it's just basically bouncing up and down this little range, right? Up and down this little range until finally crack. Got that nice little crack right there. And now we're going to be looking for the dollar for the GDX to continue moving lower at least a little bit. We do have some buy areas that we're going to be looking for if it pulls down here towards 44. At the same time, if it rallies all the way back up, we want to see how it reacts around this little level, right? If it was to break back inside that channel and then move higher to the top of the channel, that means a lot of people could be trapped to the short side right here, and then we could be looking for this as a little squeeze here, or a little shakeout, I should say, and a nice little squeeze to come. So a lot of things setting up, guys. You really just have to sit back and wait for the trade to come to you, wait for it to set up. So that's the GDX. We can take a look at the weekly chart. You can see how the weekly chart, that 55 level, is still important. At the same time, we're coming right into this little area of this little back test from the downward channel breakout. You guys that have been in the chat room intraday, you guys know how these setups work. So we're going to be looking to see if these gold miners start to get bought up down here now that they probably shook some people out. And then let's take a look at the monthly chart. Again, you can see how that 54, 55 area is key resistance based on the fact that throughout the year in 2010, throughout the 2011, you can see how this GDX was really just trading in a range. So once we broke down out that range, it now acts as resistance. And really, you can't get real bullish on the GDX until it starts holding above 54 and this little 55 area. All right, so that's how the GDX is looking. Let's take a look at the SLV. I know a lot of you guys out there that are trading with the precious metals are trading the SLV as well. So therefore, the SLV needs to get back above 32. Until it gets back above 32, I'm not really looking to do anything with the silver. We can take a look at the weekly chart real quick here. Weekly chart still looking pretty decent. Nice little bounce off that 30 level there. And then let's take a look at the monthly chart. Monthly chart still looking decent. Really just trading in a range so far. Or this little holding this little bottom support down here around 25.69. Yeah, we're trading in a range between 34 and I would say this 26 level there. So about $8 range there. All right, so that's how the SLV is looking. Let's take a look at the Volatility Index here, VIX. Every time volatility pops up, I don't know, they just faded or just trade sideways. Doesn't really look like there's any real fear in this market. And this was a little downward trend line that we broke right here. Again, I'm not going to say it again, but I will go ahead and say it again. Screw it. We did call the break on the Volatility Index. We did have a nice little downward channel in play. And right now, volatility index, the VIX is just trading in a range between 19 and this 16 level. Want to see what happens at this little high base consolidation that we've been in for about 4 weeks or so now, about a month. If we do get some selling pressure or on the VIX, in essence meaning the market's probably floating sideways to higher, we're probably going to be looking for the volatility index to come back down towards this 15 area. I do think that this 15 area might be a good area to pick up some VXX calls or buy some volatility, for the fact that, remember, this was this nice little downward channel that we had in play right here. All right, let me zoom this in, correct? All right, so therefore we really haven't got an official back test of the trend line that we broke. We came near the area and they bought it right back up, but we haven't got that official back test. That could happen as early as next week as we get a little bounce. Maybe sucker some people to the long side real quick for thinking it's a bounce. Volatility spikes down, rechecks this area, and then gets bought back up, and then we look for that breakout. Who knows? We'll have to wait and see. But we do have a lot of clues lining up, and that's why we take this on a day-to-day basis, and we approach the markets every day with a different game plan, and we look for clues. Not everything stays the same, so you guys want to be flexible. That's how the volatility index is looking like. Now let's go ahead and take a look at some key sectors real quick here. One sector that you want to watch this week is going to be the retail sector, the XRT. We have Black Friday coming up for the holiday season, as the day of Thanksgiving. A lot of retailers are opening up that day to start these store sales, get these store sales moving. And you can see the XRTs right here on this 200-day simple moving average and exponential moving average. So you want to watch this XRT. One retail store that I like, and I'm just going to go through a couple stocks here, guys. I already did the update on the indices, and as you guys know, every Sunday night at 9:30 p.m. we do a little live chart session in our chat room to get everybody prepared for the following trading week that we have coming up here. So therefore, TJX is definitely one that we're going to discuss tonight. Take a look at the stock here. It looks pretty good. If it can get back above this key 43 level, we'll be looking for TJX to get a nice move to the top side. So we're watching that, but in general, just watch the retail sector. The XOI, the oil index, take off my channel studies here. The XOI, the oil index, has been getting crushed since it made this little high right here. And even though this doesn't look that bad, but a lot of the stocks have just been getting mollywopped. And I'm talking about I'm talking about like Oxy. Stock was trading at 94, now it's all the way down at 74, down 20 bucks. Nice reversal in there. But then, even then, if it gets a nice reversal here, it still has all this major resistance from this key level that it broke at 77.26. So we can't get too excited about this bounce that we're getting, and that we may get, or that we are getting in some of these stocks that happened on Friday. We want to see some of them hold those little reversal lows that they made Friday, chop around a bit for a couple of days, and try to build that little base down here. And a couple of names across the board. So anyway, that's just one example. Let's take a look at the BKX. And again, we're going to go over most of the stocks in tonight's chart session, so make sure you're there. If you want access to that, make sure you fill out that form on the homepage of wallstreettrading.com so you can get the credentials to log into our chat room. All right, so the BKX got a nice little bounce there. I did say how the BKX could be in the nice area via our little channel analysis here that took place here before we broke out. Again, we call that breakout. Now, this is going to be actual check right here after selling off. So if the market is going to bounce, make sure you watch these financials stocks to see. Really want to see the BKXO, the banking index, get back above 48 there. Let's see here. What else do I want to take a look at? Let's take a look at the semiconductor stocks. SOX still trading like garbage. And if it breaks below this 350 level, we can see some more selling in the semiconductor stocks. You can see at the same time we did have this little key downward trend line that we broke out of. Then we pulled right back in below it. And right now, the semiconductor stocks could get bought up because we are down here at the support. The market is oversold. So these could be some good buying opportunities. One semiconductor stock that I was looking at was Qualcomm. You can see how this one's kind of hanging up here on the 61 level. Let's take a look at this other one. See, I guess that one's been getting crushed. Cree was one of the strongest semiconductor stocks, but that one has been rolling over. Let's take a look at SNDK. Let's take a look at Intel. Intel, a little hammer there. So yeah, so Qualcomm actually looks pretty decent compared to the other stocks in that sector, to the other semiconductor stocks. So let's keep an eye on Qualcomm. And That's about it, guys. We have a lot of more stocks to talk about, but I'll be going over that in tonight's chart session at 9:30 p.m. Be there or be square. Make sure you guys have a great Sunday. Enjoy football. Enjoy times with your family and friends. And I'll catch you guys later on tonight. If you have not been to our website, wallstreettrading.com, go there, check it out. Great market analysis if you're an individual prop trader looking to get better rates because you don't have good rates at your current firm, contact me via email, ccooper@wallstreettrading.com, and I can guarantee you that I can find you a better rate to help you have success in your business if commissions are killing you. In any case, have a great night, guys, and I'll catch you guys later on tonight at 9:30 p.m. Cheers.